that conversation forward. We've got Matt Orton joining in the show right now. Matt, hi, morning. Seems like a stronger possibility now of a rate cut. Is that what equity markets and bond markets are pricing in?
Hi, good morning, Aisha. It's always great to join. And yeah, I think markets are certainly enthusiastic about the prospects of a Fed rate cut. We've talked quite a bit in the past about my expectation for a December rate cut. And I think it was put on pause for a little bit, given some of the more hawkish commentary coming from Fed members. But given the data and what we heard from Williams a week and a half ago, it certainly looks like we're going to get a 25 basis point cut. Markets are pricing in almost 100% chance of a 25 basis point cut next week. But the key for investors at this point isn't so much the cut that we're going to get. I think the potential risk and what we need to really pay attention to in the FOMC meeting is how hawkish the committee is with respect to future rate cuts, because there's uncertainty with respect to what the neutral rate is, the ultimate destination of where we want the rate cuts to go. And given how strong the economy is, I think there's a risk that the ultimate destination is a little bit higher than the market is expecting. But I think that's okay, because I would rather take strong economic growth with a more gradual cutting cycle than the need to have more rate cuts. So I still think it's optimistic for equity markets. And if there is a little bit of a wobble with respect to the Fed meeting in December, I'd use that as a buying opportunity.
Hi, Matt. Morning. Matt, what therefore does this mean for markets outside equities, gold, crypto? We've seen those markets also move a fair bit. They've also been quite choppy. Are there opportunities there?
There are. I've been quite bullish on gold throughout this year, and I'm still very bullish moving forward. I think the fundamentals support it. Central bank demand supports it. You're seeing increased retail adoption. And when you look at currencies, while the dollar may have stabilized a little bit, you're seeing it drift lower again. I think over the course of the next 12 months, the ultimate direction of travel is also going to be lower. If we're concerned about increased fiscal spending around the rest of the world, that further supports gold. So I am optimistic about where gold can go. And commodities in general. I mean, look at where oil prices are. I think they're incredibly low with respect to where global economic growth stands. I think you're going to see continued strong growth from India. I think Chinese growth is starting to pick up a little bit, while supply coming from the US is starting to slow down. So I think lower supply, more demand should ultimately be supportive of oil prices. So that's another area I'm looking in the commodity complex.
Matt, how do you look at some of the global events which is coming? And you have, of course, the Indian MPC or Monetary Policy Committee meeting tomorrow, and then you have the Fed meet coming in next week, followed by the Japanese Central Bank meeting also happening the week after that. So there are three monetary committees meeting, two from the developed markets and one from India.
It's certainly important. I mean, looking at what the central banks do, I would say particularly in India and Japan is going to be really important. I think the Fed expectations are already well baked in. And like we talked about before, really what the market's going to be following in the US is how relatively hawkish the Fed is with respect to forward guidance in 2026. But with Japan and India in particular, there are challenges with the currency. I mean, the rupee has been incredibly weak. That's a challenge for foreign flows coming into India. And I think it's just a broader challenge for the index really breaking out. And you've seen significant issues in Japan as well. The BOJ has been tested. Their finance department has been tested with respect to how much the market can push depreciation of the yen. So how hawkish the BOJ is, I think, is also going to be important. And their guidance with respect to their views on the overall economy, inflation going forward, is going to inform currency moves, which therefore are going to bleed into the overall equity markets. So I think following the implications of central bank meetings on currencies are going to be really, really important from these December meetings.
Japanese 10-year is now trading at around 1.9. And that also, is a big trigger for some of the reversals of the yen carry trade.
It is. And I think the yen carry trade is always going to exist, whether or not it's lighter now versus where it has been in the past. I'm not concerned about an ultimate breakdown in some of those traditional trades you have in the overall market. I think, to me, the moves in the currency, particularly with respect to what's happening in the equity markets overall and where foreign investors are looking to put money, I think that's very, very important. And so I think you're seeing Japanese markets be a little bit more optimistic because there's hopes that maybe you have stabilization with respect to the currency, which then should bleed into optimism for equity. So I think you have to see stabilization in both the yen and the rupee to really get those markets to break out to new all-time highs.
And that's exactly what one's anticipating. But Matt, thank you so much for your time today. Great speaking with you.
Thank you.